Oh, I thought you, I was like, sorry.
Okay, we're officially
I was so
recording now.
confused, because you were like, I was
I'm
like, you
sorry.
just gave us the paper.
No, in World Bliss.
Alright, so I'm recording because my Tuesday, Thursday class has to give their presentations tomorrow. And this is gonna be their review also. Okay,
That's like for that.
yeah, they can see you guys out there. Alright, so for the people that are watching this online, because I know every one of you are gonna go back and watch this video. The final review handout is on your Canvas page. Okay, at the bottom, I'll get it to everyone here in class, so let's run through it real quick to make sure that I haven't switched anything on yet. No, first, there are 15 multiple choice questions from chapters 14 and 15.
That's a lot.
Oh.
10 of them, 10 of them are over the cash flows. 5 of them are over your ratio analysis. Okay, that's how your multiple choice questions are split up. Then you have a 15-point problem, which is creating the operating section of cash flows using the indirect method. And we'll practice one of those, but again, remember that is starting with net income and making our 4 adjustments. Right, the non-cash expenses, current assets, current liabilities, and the gains or losses. You got a question?
These ratios, will we have to, so like the one ratio, you know, we had to figure out the tax rate. That one be on there?
Maybe. I forget which one you had to figure out the tax rate on. Return on assets.
That long one.
How about that? It's not on here.
Awesome.
Return
Because I
on
still don't
assets
understand how to
or-
calculate tax rate.
That's the one that has the tax rate, right? That's the only one that has tax rate.
Yeah, so that's
Yeah.
not on there?
No,
Good, because I was told.
I'm gonna add it tonight then. All right,
So,
yeah,
like the explanation point of, like, part of that, is that like the majority of it, or is just like calculating it?
okay, so here's what it looks like, okay? So on this side, you have your balance sheet and your income statement, pretty comprehensive thing, okay? Over here, 3 questions. So like 3 or 4 ratios on each one. You calculate the following liquidity ratios. Okay, then I'll tell you what to calculate. In general, briefly explain what the liquidity ratios are in general and explain the meaning of each ratio you kind of calculated. So just in general, and then apply it to what you just calculated.
So can we go?
So for example, liquidity ratios. What do liquidity ratios in general show?
Cash.
Yeah, but why would you analyze them? I mean, you want to know it's cash, but why? So you want to have cash because you want to pay off short-term debt, right? So the liquidity ratios demonstrate your ability to meet your short-term liabilities, your current liabilities, current obligations, right? So then if you're looking at each one, it says explain each one. Well, the current and the quick asset, if they're over 1, that's good, right? They have more. That's just, it's a general explanation. As far as accounts receivable turnover in days or inventory turnover, or those other ones, right? The faster they turn over, the more times you're collecting that cash. Okay, I just want you to have a general understanding of what the ratios are showing. Right, so you want your liquidity, current ratios of 1 or a little bit higher. Turnover ratios the shorter the better because you're collecting cash and it's showing your ability to pay off your short-term debt. Second is your solvency ratios. What do solvency ratios show? Do you remember this one?
Wait, what?
Solvency ratios, or they might be called leverage ratios.
Okay.
The leverage or the solvency ratios, same thing. They show solvency means your ability to pay your long-term debt. And when a company is going bankrupt, when they can't pay their debt, you'll hear it be reported on the news or written in the paper that they are insolvent. That's what it means, is they can't pay their debt. Okay, so the debt ratio and the debt to equity ratio. In general, kind of what are they showing?
Is debt ratio it's assets divided by debt or something like that?
It's actually liabilities divided by total assets, I wrote it down on the sheet. Remember, you're gonna get to use this sheet on your test. You get this formula sheet.
Can we get a correct one? Can we get a correct one?
What, all you gotta do is just scratch it out and write on it. There's only 2 corrections you need to make.
So I need to go through, reprint it off, make the marks.
No, just make the marks on the one you have now.
Well, but I have way more written on it than just.
Yeah, I do too.
All right, well, I have it corrected. If you want a new sheet, I can get you a new sheet. It's marked up. Then it will be a corrected one.
Sorry, I don't want it to be.
I'll bring it in. I'll bring it in that day. Yeah, because then I don't want you to have a bunch of stuff written on here. Like, I don't want you to explain what the ratios mean on here.
No. I can't use mine.
You can bring it in, and if I don't approve it, I'll have a new one for you.
Okay.
Okay, but so what is times interest earned? Just in general, what does that number show us? How many times our income will cover our interest expense? Right, so the bigger the number, the more comfortable you feel about them making their interest payment. And then the debt ratio just compares assets, shows how much of our assets is taken up by debt. And then the debt to equity ratio explains how our company is financed, what percent is debt, what percent is equity. Again, those are irrelevant numbers by themselves. That's really what you have to compare to the averages. And then finally, our profitability ratios in general show how profitable the company is. What kind of return investors are getting for their money, whether they're investing in stock. Okay, what kind of return are we getting on our assets? What kind of profit margin are we making? So there's 3, 6, 10 ratios. 3, 3, 4. 3 liquidity, 3 leverage, 4 profitability. Okay, so calculating each ratio will be 2 points each, that's 20 points. And then there becomes 20 points on the explanations. All right, after that, you get to the comprehensive part of this test, which is 19 comprehensive questions. Mark over here how many points these are each. Okay, yep, so for 3 points each on these 2.
I have a question.
It makes it 157 points total.
Okay.
Yep.
I have a question. So, are we gonna have to, I know it says that from exam 2, we have 2 decision calculations. Are those the only like calculations we have to make?
Yes, for the most part.
And the rest are like basically like definitions or,
Definitions, processes.
okay,
Okay,
got it.
right, yeah. So some of the stuff we should know about, right? Okay, and these are all coming from the test stuff. But what did we do in this class? Just in general, we did managerial accounting, right? What's the difference between managerial and financial accounting?
Managerial is for internal users and financial is for external.
Yes, okay. So then we started off, we did what at the very beginning? We were identifying costs,
Mhm.
right? So you should be able to identify what are our product costs. what product costs are.
Materials.
Materials,
Labor.
labor, and overhead, right? Those are all product costs. Everything else would be considered a period cost. Product costs, how do they get expensed?
That's costs.
It's cost of goods sold, right? In a manufacturing company, how do those costs flow through the system? So what are our inventory accounts?
Accounts receivable.
Well, it's not an inventory. Inventory accounts for a manufacturing company. So we have raw materials, right? And then all costs get added into work in process. Right, that's where materials go into, our labor cost, overhead, all goes into work in process.
Finished goods.
And then it goes into finished goods and then expensed as cost of goods sold. So that's kind of the flow of cost through a manufacturing company. Okay. What else did we talk about in those first few chapters? Let me look at these questions. Yes, okay, so that's kind of our first chapter, our basic thing there, right? And we did cost systems, we did job costing. Right, we had to find your predetermined overhead rate. I don't think you have any of those calculations in there. No. Okay, and then we assign the cost. So understand how costs flow through there, your inventory accounts. All right, your different types of costs. That's basically for your first chapter. Then we get into our second unit, right? We start talking about cost, volume, profit analysis, and decision making. What is a contribution margin?
Is it revenue minus, some kind of expense?
Variable costs. Remember when we got into this section, we started breaking it down into variable costs and fixed costs. So what do we know about variable costs? How do they behave? On a per unit level, do they change or stay the same? Talking about our variable costs. They stay the same, but the total cost changes, right? With variable, it changes based on production, whereas the unit cost stays the same. Fixed cost, the total stays the same, but the unit cost changes. What do I mean by break-even point? What is that term? Just not how to calculate, but what does it mean? I don't remember what our break-even point just in general means.
Is that when variable costs and fixed expenses are equal to like the revenue?
The exact amount you need to sell to break even.
Yeah,
Not make any money, but not lose.
yes, yeah. How much do we need in units or dollars to have zero profit, zero gain, zero loss? Okay, what about margin of safety? You remember that term? That's the amount of units or dollars we are above the break-even point. Okay. So we did that, and then we went through all of those decisions, right? So there's gonna be a couple of those we have to go through with make or buy. Keep or close the segment, okay? Something like that, and then we get into our third unit. What is a budget?
Short-term financial.
Short-term financial plan, right? Then we made our sales budget. It's our first budget to make the operations, the financing budget. And then we calculated variances, right? Could be off for labor or materials. Or labor or materials, yeah, labor or materials, and it could be because of quantity, efficiency, or the rate or the price. Okay. So when you're looking at these questions, again, they're going to be those topics, but very general when it comes to them, okay? And then question number 19 is, what is the best Christmas movie of all time? That definitely will not be your bonus question on here. And it's not Christmas time. I don't know what I'm gonna put for that question yet. But what is the best Christmas movie of all time? It's a Wonderful Life, A Christmas Story, Elf, or other?
Ooh, you have Wonderful Life, and Elf.
I like that.
Forgot about that.
Other, it's the Grinch, hands down.
No, absolutely not.
Other is the correct answer, but it's not the correct.
Okay, the Polar
It's a-
Express is right up
Yes,
there.
Polar Express is my vote.
Yes.
He's got one rule.
What? No, I disagree with this group.
All right. We'll move our review sheet over. Let's do a practice problem here, right?
Hey, Mr. Lynn, do you have my final exam? No, do you have the other exams that you brought?
Oh, yes, I do.
Have you seen this one? You don't know what you're missing. You don't know what you're missing. Yeah.
I just like.
I should have put Miracle on 34th Street, because that's better than this one.
Oh, there's a lot of poor decisions there.
Tom Hanks narrating it.
But which one? Are we talking like the 49 one, or are we talking the newer one? Newer one.
I never watched it. One of the others.
Newer one's not very good, so. You suck.
He's the feisty one today. Okay, not me. Always have the worst. Yeah.
Use that in your entertainment value for the, reward somebody.
Right, yep, so we're gonna try to do the top part. Okay, first, using the indirect method, calculate the cash from operating activities. So I gotta bring up my whiteboard here, so my people watching. If I started writing on this board, I'd really freak out. When we watch the video. I don't say anything bad about them either.
Look like Jackson's in, right?
Yeah.
Yeah.
He sits right there.
Yeah.
All right, indirect method, where are we starting?
There we go.
Net income.
Operating activities.
You'll second page top one, right?
Yes, net income. 250,000. What is step one?
Appreciate.
What is the whole step? No, it's add back non-cash. What was our depreciation expense? 51,000, right? Given to us there. Should we go into our next step?
Your current assets?
That is the next step.
Yeah.
I'm not ready to move on to the next step yet.
Oh, you have to do your annual,
Amortization, right?
yeah.
Okay,
And
remember, amortization is a non-cash expense. It is like depreciation, but you do it on patents. And you do it on your intangibles. Okay? So plus amortization. Of $11,000.
Wait, it's 4,000.
Oh, it is. Very good. I looked at the wrong number. And as Bernie said, we start analyzing our assets, right? Our current assets only.
I do have a quick, are you screen sharing?
Yes.
Okay, I was just making sure, because I didn't see the right now. I just want to make sure for their benefit.
Yeah, see if I do that, it comes back.
Okay, I just want to make sure, sorry.
All right, so we measure our current assets. What happened to our accounts receivable?
It went up.
That did not.
Went down.
They went down.
Oh, why is it backwards?
It was opposite.
So it went down by $3,000 minus 3,000. What do we do?
Add it.
Add it, do the opposite, right, for our assets. So plus a decrease in accounts receivable. For 3,000.
Do we have to like say it decrease? Yes.
That's right on there, yeah.
Okay,
Then our prepaid expenses did what?
So that's considered a
it
asset.
went down.
Prepaid expenses are assets, yes. So plus decrease in prepaid expenses. That's it for current assets, right?
So I have a question. If it did happen to increase for one of those, would you still add it, or is it the opposite?
Assets are opposite,
Okay. So you add it just because it decreased?
yes.
Okay.
Now remember when we get to liabilities, that switches.
Mhm.
And that's where we're going next, right? Next is our accounts payable. It went down by 1,000. But since we're in liabilities now, we do exactly what it did. So we would subtract the decrease.
She did 1,000. Yeah.
Because it went from 15,000 to 14,000,
Oh,
the accounts payable.
So I know Brittany asked this question, but I didn't hear the answer. I see you have decrease in AR, decrease in prepaid, decrease in, do we have to put that? Or can we just put like accounts payable in it?
We should put the increase right with the decrease.
Okay.
What's our fourth part? So we have no more current
Gain.
liabilities. Yeah, so eliminate gains and losses. Which I do not see one here, right? You would have to tell us that we had one.
The gain would be decrease and then loss would be an increase, right?
Yes.
Yes. Yeah, I think that makes it.
For your gains and losses, yes. Add back losses, subtract gains. Oh, 305, 308, 310, 309, is that what you said? And that's it for that type of question, okay? Down here on the bottom, Lindy, when I issue common stock, which section is that going in my statement of cash flows? Is that gonna go into our operating, investing, or financing?
Almost like it's investment.
No, because here we're gonna be talking about our own stock. So our own stock is financing,
Oh, yeah.
okay? And when we issue it, would that be cash coming in or out?
Oh,
In. When we issue stock, we're giving out stock and getting cash. Brittany, purchase of land. Which
That's
section?
investing
It's investing and money coming in or out.
out.
Very good. Abby? Repayment of principal on bonds.
Would that be financing?
It would be, because finance, we're talking about our own bonds there, right? Our own company's bonds. Inflow or outflow?
Out.
Outflow, right? So the repayment of principal means we're paying them off. We are terminating them.
That was investing,
No, finance,
finance.
because
Finance,
it was our own bonds.
and it's outflow, right?
Yes,
So issuance of common stock was also financing.
yes. So financing deals with our own company's stocks and bonds.
So,
If we're buying other companies' stocks and bonds, that's investing.
Like the purchase of land.
like dividends are paid.
That was financing.
That's investing. But it's not, it's investing, when you said like, I said buying other companies' stocks and bonds is investing, and you said like purchasing land, I'm like.
That's a good point, yeah. Yes.
But yeah, those are both considered investing activities. All right, Amanda, what about dividends paid to the company's stockholders?
So that's an outflow and it's investing.
This is gonna be financing. We gotta try to recall that dividends are paid out to stockholders. Okay, so this deals with our own stock. Our own stockholders are getting some money here.
So the investing category is only for our own personal investments, not the fact that they invested in our company. It's kind of my thought process. but I'm
Yeah,
thinking of it wrong.
yeah. Then that's the tricky part about this cash flows is that investments, a lot of students do think that they think investing is, right, yeah, people investing in us, giving us money. No, it's the company investing in itself through PP&E or investing in other companies. And finally, Brent, what about proceeds from the sale of the company's used equipment?
Financing,
Investing.
Offer,
investing.
investing. Why?
For what?
Oh, because it's plant and equipment.
Yes, and it says proceeds.
So it's investing inflow, right?
No, it's investing.
Investing, but,
Yeah, and you said inflow?
yes, sir.
I'm sorry. Yes, it is an inflow from investing. Proceeds means the amount of money you actually received.
Okay.
Okay, if it would have said a gain or loss on the sale, then it would have been operating, right? Because we have to eliminate that from the operating section.
Okay.
Depreciation.
Yep, where is depreciation expense?
Uh,
Which section? It's in our operating section, right? It's the first thing we do. Just subtract out those non-cash expenses.
And that's inflow
It's not really either,
either.
right? Because we start with net income and we make adjustments to it. It's a subtraction to our net income. Okay, I put the balance sheet on here. I don't know why, since you're gonna have your ratio sheet. It should be fairly simple for you, but. What is my average inventory in this question? If I had to find inventory turnover, how do I get that?
60,000. Is that correct?
25 plus 35. Plus 60, right?
Nope,
Where is it?
I said average inventory. You'd have to take 70 plus 50 divided by 2. Or when you look at it, you see 70 and 50, and then it'll average out to 60.
Wait, are we on Gilbert company, right?
Yep,
What do you see? 7.
I said the average inventory,
Okay,
so it's, you gotta go down the inventory.
and then you add it,
Year 1 and year 2, and then divide it by 2, right? That's how you get your average inventory.
Sure, beginning and ending.
Yep, beginning and ending, so it's year 1 plus year 2.
Wait, is it 95?
No, it's 60.
60, but I'm adding it.
Yeah, so you're looking at inventory, right?
Huh?
Yeah, you're looking at inventory, right?
Yes,
So you have 70
plus 50,000.
plus 50 divided by 2.
Okay, but, oh, so like on my phone, if I add it, like if I do it exactly the same, like in the same format,
Yeah,
it'll,
done.
yeah,
They'll
Yeah,
do
you
the
gotta-
division first.
yeah, so, I'm sorry.
Yeah, orders of operations. I forget what the acronym is.
So like on Apple,
That
that's how it
person-
is.
My
But I'll use my
dear
real
Aunt Sally or
calculator.
something like
Please,
that.
please, my dear.
Oh,
Sally.
excuse my dear.
That one is just weird. It's just easier to remember PIMDAs. Like, why do you have to have what is it? Not a colloquialism, it's a. No, there's a name for, it's a saying for irrelevant.
I like them too, basically when they're words.
Dealer.
So are you gonna be an accounting major, right?
Yeah.
Remember COPAR, it's your revenue recognition principle. First, there has to be a contract,
Did we learn this?
then different service obligations. Then you set your price, then you allocate the price, and then you finally recognize the revenue. That's the 5 steps for revenue recognition, and I remember by COPAR.
Copart,
I made that up myself when I was a tutor.
did you?
I didn't make up dealer. Dealer was given to me. You don't remember, you guys didn't hear dealer if you weren't in my class.
I did somewhere. That was the class, maybe it was your summer class I failed. Maybe that's why I remember that.
If you were going to calculate the quick ratio on this one, what would you use for your numerator?
Like.
Yeah.
Your numerator is the top.
Mhm.
So you do your cash, right?
Mhm.
And then you add something.
Your short-term investments.
Yes,
And accounts receivable.
Do we have short-term investments?
no, well,
Is it marketable securities part of that?
Yes. So marketable securities is another way to say short-term investments.
ah,
Okay, securities are investing in another company. Okay, that's the financial term. So you could have debt securities, that means you're buying bonds of other companies, or you could have equity securities, means you're buying stock in other companies. Okay, but when it says marketable securities, it means it's short term, they're looking to market them and sell them as fast as they buy them to turn for a profit. And if you remember back to your balance sheet setup, that's how it's set up in liquidity, cash, short-term investments, accounts receivable. So if it has to be stuck between cash and accounts receivable, it is a short-term investment, no matter what it's called. Okay?
I got it. It's a mnemonic phrase. That's what I was trying to say.
Right, and I would just, won't have much else to tell you. Okay, just end with this, make sure your ratio sheets are accurate. Remember, your debt ratio should be total liabilities divided by total assets. I just wrote them on the sheet wrong. I put them, flip-flopped them. And then also then, in your times interest earned, where it says income before taxes minus interest expense, that should be plus interest expense. You just need to change that minus sign inside the parentheses to a plus sign.
I have a question.
Yes,
A short-term payable is a current liability, right?
yes.
Okay.
Any other questions? Been a pleasure to have you all in class. After you take your test, I'll have my business card up here. I'll put my phone number on it, my cell phone number. Feel free to take one. You don't have to. If you ever need anything, or need a recommendation, or you get into your other classes and you need help. Something like that. I'd be more than willing to help you out, so you can take one of those. It's been a pleasure. It's been a fun class.
You've been a good teacher.
Appreciate it.
That's for the dad jokes.
Like I told Brett earlier this morning, he was in my class. I tell you the dad jokes because I'm hoping to be a grown up. All right, people. I'll see you at your presentation tomorrow. Or if you're watching this after you get your presentation, I'm sorry, it really wasn't that bad. I didn't mean what I said.